Good morning, everyone. Welcome to Pre-Bell with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst. Date is June 6th, Tuesday. Disclaimer for this podcast is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Let's look into Nifty's daily chart to get an overview of how the market is placed and what are the levels we are looking into, and also I'll also try to give the O'Neill perspective and how we are viewing the market at the current moment. If you look at in a slightly longer time frame, that is a period of last 2 to 3 months, Nifty has been in a clear uptrend. You can see here Nifty has advanced 1879 points from the lows it has made in the March. During the process, Nifty reclaimed its key moving averages, which is a positive sign. Nifty trading below 200 EMA is a very rare sight. It happens only for a short period of time. You can see here the September also for a period of 1 week, Nifty traded below its 200 EMA. Here the period is slightly longer, from almost a period of 1 month. It traded below its 200 EMA, but as market dynamics changed, the market Nifty has also advanced and reclaimed its key moving averages. But if you look at more closely in the last 2 weeks of period, you can see Nifty tested its 21 DMA, which is the green line here, and on both the occasions, Nifty found a good support at its 21 DMA. Again, a positive sign. But in the last 5 to 6 trading sessions, you can see here the intraday trading range has come down very narrower. It has become very narrow. You can see here the length of the candles is very short. Also, it is not able to close in the higher off. You can see yesterday it opened higher and it traded in the positive territory for most of the trading session, but on the closing basis, it closed near the day's low, which is not a positive sign. Also, if you see, Nifty is currently trading at almost 80,600 level, so 250, 300 points below its all-time high. That is less than 2% from all-time highs. The Nifty advances 2% from here, then we are going to see a new all-time high. Then market participants will rejoice and investors will come into the markets and take the Nifty further higher. Talking about O'Neill's perspective, we are in a rally attempt. We have been waiting for the market to give a follow-through session to change the market status to confirm the uptrend. However, in order to capture the ongoing upward movement in the market, we have added stocks to portfolio and which are doing good as well when compared to Nifty index and Nifty mid cap indices. Even though we are in rally attempt, we have been adding stocks. So that is a clause we need to observe. But when the market changes to confirm the trend, then the probability of breakouts being successful will be on the higher side. Then we'll be adding more and more stocks in that scenario. On the downside, there is a very limited downside. Most of the macroeconomic pointers are pointing for the upside. But to be on the cautious side, to be on the safe side, it's also important to look at the support levels for the Nifty as well. Starting with the 21 DMA, which is a green line, will be a major support for the Nifty for this month, for this week, and next week going forward. If that level is also breached, then the next level will be 200 DMA, which is very close to its 100 and 50 DMS as well. So these three levels, slightly below 18,000 levels, will also be a very crucial support for the index. If these levels also breached, then the downfall will be more steep and steep. But that is the probability of that being happen is very lesser when compared to Nifty advancing there from the current market price. Some of the stocks which are in news in the today's trading session, which will be under radar, are SBI Cards and Payments has approved raising funds up to 3,000 crores by issuing non-convertible debentures, NCDs, which is commonly called as in one or more tranches on a private placement basis. SBI, State Bank of India, which is a leading public sector bank in India, the board of directors will meet on June 9th to discuss fundraising plan for the current financial year, that is FY24. The fundraising can happen by issuing debt instruments in Indian rupees or US dollars or any other foreign currencies on a private placement basis. So on the June 9th the meeting conclusion, they will come up with the company's plan of capital raising for the FY24. PL Kashyap and Sons has received an new order worth 145 crores from a Pune-based company. And the total order book with this order as of date, it stays at 2,774 crores. JK Cement is moving across the nation by acquiring Toshali Cement for an investment of 157 crores. This is only to focus on the eastern parts of the country. With this acquisition, they will be able to present in the eastern parts of the country as well. So these four stocks which are in news will be in the radar today. Some volatile actions might be expected in these companies. India's services PMA has come up at 61.2, which is very positive sign, and it definitely inflation is on the higher side, but PMI coming at above 60 is a very positive sign. Apple's developer conference is due, and whereas the stock market investors have rejoiced this, and Apple shares have hit all-time high ahead of this conference. Again, a positive sign. So most of the analysts are expecting positive announcements in these conferences. Talking about institutional activity in yesterday's trading session, foreign institutional investors have sold nearly 700 crores of equities, whereas domestic institutional investors have given support for the market. They have bought more than almost 1,200 crores of Indian equities. If you are looking for global cues, US market closed in the negative territory. Dow Jones S&P closed slightly lower, but whereas Nasdaq closed almost flat. This is majorly because Nasdaq has tech heavyweights such as Apple, Facebook, and other companies. Where on the one side, Apple making new highs, so that stock has given good support for the Nasdaq index. Asian markets are trading on the higher territory, where you can see Shanghai is trading almost 0.2% higher, Nikkei 0.4% higher. Kospi index is closed for the trading in the today's trading session. So the cues are mixed. US market is giving negative global cues, whereas Asian markets are giving positive cues. So it's very tricky situation for the Indian market. But if you look at SGX Nifty for the cues, definitely 70-80 point higher opening is expected. Nifty is expected to open at 18,700 level. If that higher opening is sustained and follow-up buying happens, then that's a very good positive sign for the market. Most time, if the broader market also joins the benchmark index, that is Nifty, then we might see good amount of breakouts happening and total model portfolio also being good in this trading session. So the chart has already picked the ICICI Bank. This company has been in our buy watch list. There is no doubt about the fundamental strength of this company, a leading private banking player in the country. And you can see here that the stock has formed a cup base pattern for a period of almost 6 months. And that is the reason RS rating is slightly lower at 60, but as soon as the stock breaks out, then RS rating will also improve and RS line will trend higher. Fundamentally, you can see EPS of 97 is a very positive sign. The company has a market cap of nearly 7 lakh crores, almost 7 lakh crores. You can see there 6.6 lakh crores of rupees market cap. Still, the company is able to generate 30-40 consistent growth in its EPS and 20-30 growth in its sales. That shows the operational capability of this company and also the growth opportunity that is ahead in the Indian economy. Overall, we like this story. Only thing is RS is slightly lower, but as I mentioned, it is free to improve as the stock breaks out. If this happens on a higher volume, definitely we might consider for a stock addition. If you have this stock in your long-term portfolio, then continue to hold it, and you can keep a stop loss around its 50 MA or 200 MA, which are closer. Uh, and please keep watchful on the downside. If these levels are breached, you can start trimming your positions depending on your buy price.